Welcome back. You're still tuned into Midcap Masala right here on ET Now. We've been in conversations with corporates, and let's put the spotlight on one of those. We are going to talk about the co-working working space segment, and we are in conversation with Mr. Nitish Sarda, founding and managing director at Smartworks. Mr. Sarda, morning. Thank you so much for taking your time out and joining us here on ET Now. And first of all, congratulations. You've become India's first listed flex space provider to cross 10 million square feet operational portfolio. If you can take us through what led to this, what is the roadmap now going forward? What is the next goal that the company is working for?
Look, obviously, crossing 10 million square foot is a great achievement for the company. But I think we've been growing at a pace where our total operational footprint today stands at 10 million, but the total committed footprint is over 15 million square foot. I think what is driving this growth is that Flex is no more or managed office is no more an alternate solution for large enterprises. It's become a mainstream offering where enterprises are looking at this as a permanent solution for their office expansion across the country. And Smartworks has always, its moat has always been its scale. We are the only flexible player in the industry which has been able to scale across at this speed across the country in different cities. So this has really allowed us to grow faster than anyone else.
Okay, that sounds good. Mr. Sarda, you just said that 15 million square feet is what's in the works, so 5 million additional. If you could talk to us about where this is going to be spread out, what is going to be the category of clients that you're looking at. And I was just looking at your geographical expansion. You have very limited presence in East India. Any plans over there in that geography?
I think we've spread across almost all the top 9 tier 1 cities, and we're also present in a couple of tier 2 cities. We've equally distributed our growth across the north, west, south, and east. East India generically has seen Smartworks grow up to almost about 300 to 400,000 square foot now, which, considering the kind of absorption that happens in that location, is still a significant number. So I think we've distributed our growth significantly. The 10 million square foot that we're talking about happens because of Intellion, our new tech park in Bombay, which is getting operationalized, where we had a Forbes 2000 company take up over 1,100 seats with us. That helps us get the operational square footage above the 10 million square foot mark. We also have significant amount of signed up inventory, which are the properties which we've already identified and signed up, which are coming in parts of Bombay, Pune, Bangalore, as well as Delhi NCR. So all these new properties which are coming up will allow our footprint to increase further to 15 million square foot, which is already committed. And this shows a growth of about 35 to 40%, which is something that Smartworks has been able to regularly deliver. And despite of this high base, we will continuously deliver these growth numbers.
That's as far as your capacity expansion plans are concerned. But Mr. Sarda, let's also talk about demand. And GCCs clearly are driving demand for co-working space. If you can take us through what are the demand drivers and where are you looking to expand? Will it be in metro cities, tier 1, tier 2 cities? I understand that you did take us through your growth roadmap, but where is demand coming from?
So demand is coming from all directions. If you look at GCCs and large enterprise, they stand at the center of this demand. The value prop that someone like a Smartworks is offering them is allowing them to make sure that they partner with a flex player like us in their growth strategy. Today, we sell a seat at about 7,500 rupees per month. If you translate to that on a per day basis, it means you're selling a seat at almost 250 rupees a day, in which you're providing them workstations, not only places to work out of, but you're providing them tea, coffee, water, all their operational needs, outdoor gaming zones, gyms, cafeterias, all within the same campus. Providing all of this at a price point of 250 rupees a day is such a significant value prop for these large enterprises and GCCs that it becomes a no-brainer for them to expand within our ecosystems. Also, if you look at the India's commercial market, we're about 100 crore square foot of space. Only 15 to 20 crores is actually owned by most of these companies. Leasing is what drives most of the growth in India. And within this leasing, specializing in managing and giving them a completely managed office solution at 250 rupees a day is what is really making these large enterprises also move into our setups. Today, 1,000+ seater deals, which is a significant number of seats, is almost 35% of Smartworks' revenue. It means that large enterprises and GCCs are looking at Smartworks as a permanent solution and an alternate to taking up traditional office spaces.
So, Mr. Sarda, I'm just trying to understand, basis what you've said. What is the average tenure of this lease?
So on an average, 49 to 50 months is what these large enterprises commit to. When you are committing to over 1,000 seats, you're not looking at a short-term requirement. You think of it as a permanent solution, as somewhere where you can see your company scale up or scale within cities as and when it requires. So 49 to 50 months, which is typically how traditional offices also trade at. That's the similar number.
Understood. So 49 to 50 months is the average lease period. And also, if you could tell us how the occupancy is shaping up for overall centers as well as for your matured centers, where I understand the average occupancy is now roughly around 93%. So what is the growth potential over there?
So our committed occupancy last quarter stood at about 92% in our matured center and 88% overall. This is from the mature center portfolio. We've also gone ahead and added another 5 million square foot of space, which is going to come over the next year and a half, which will allow us to expand and get more clients into our base. I think if you look at occupancy, in our case, our business is very predictable because of the large enterprises committing to long-term tenures. Predictability stands at the core of our business, and maintaining an occupancy closer to about 90 to 95%, between 90 to 95% is what you'll see across all our mature centers.
90 to 95%, that's the occupancy level that you usually work with. But Mr. Sarda, any major enterprise deal wins that are in the fray right now, that is in the roadmap, and perhaps new client additions that we could see going forward in the next 2 to 3 months?
We're seeing a lot of significant movement from Fortune. We recently announced a Fortune 2000 company, a Forbes 2000 company, take up almost 1,100 seats with us in our Mumbai campus. There are multiple other deals. Right before that, we had one of the largest banks in the world take up over 3,000 seats with us in our Pune campus. So we are seeing demand from GCCs, obviously taking a significant portion, but even large corporates, traditional corporates who've been in India also looking at this as an alternate to having their own office spaces because of the flexibility and the fact and the value pricing at which we are able to deliver the offices to them.
Mr. Sarda, is competition a concern for you? There are a couple of other players as well in the co-working space segment. Is competition hurting you in any form?
No, I think, see, this is a segment which is growing. This segment didn't exist about 9 years back. In a short span of 9 years, it's grown to almost 100 million square foot of space. I think there is room for everyone. We've been able to grow faster than everyone. We have a differentiated model where our large campuses and the fact that our focus is only on large enterprises committing to over 1,000+ seater deals creates a moat for us, which has allowed us to grow faster than anyone else. But I think the entire industry is doing very, very well because the base effect is still not come in, where 25 to 30% of yearly absorption of office space is projected to go towards flex. So I think there is a significant amount of headroom for everyone to expand, in which we are expanding faster than anyone else.
Sounds good. Mr. Sarda, last time when we interacted with you, you did say that margins are expected to grow continuously on a sequential basis. I understand you can't give us the exact number in terms of your financials, but if you could quantify what this gradual margin growth could be, let's say over the next 4 or 5 quarters, if you could help us with some indication here.
So if you look at our numbers, just from the first quarter of the previous year, where we stood at about 13.5 to 14% of EBITDA margins, the numbers have already grown last quarter to closer to about 18%. And you will see these numbers even grow further because the base effect is kicking in. Smartworks, at the pace at which it was growing, last year when we added 2 million on a base of 7 to 8 million square foot, you added almost 25 to 30% of your capacity. This year, when you're adding on a base of 10 million square foot, you add another 2-3 million square foot, you are adding a smaller percentage. So the base effect is automatically allowing us to increase our margins. The SG&A cost is not significantly going up because that is already baked in our existing cost structures. I think it is difficult to say or point out an exact number on how this numbers would grow to, but you have seen these numbers already grow in a short span of quarters from 13% to almost 18%. And that gives you the trajectory on how revenues as well as margins are growing.
Clearly, so the outlook is very positive. Directionally speaking, you're very focused on expanding across the country. Mr. Sarda, thank you so much for taking your time out, and congratulations once again on achieving that milestone. But shifting focus then to PNB Housing Finance, the stock